Hey, what's going on, guys? Max here with Because Bitcoin, and today we are joined by our CFO, Tucker, who's got some very interesting correlations that we are going to be going over today, specifically between different asset classes, crypto, commodities, and TradFi indexes, and when to potentially hit that perfect, juicy rotation. So let's not waste any time. We're going to dive right into the charts. Tucker's got some awesome presentations for us today. And hopefully I'm going to be learning a lot as well. So Tucker, what do you got for us, man?
Yeah, so this is something we've been talking about for a little bit here on BB, and it's something that a friend of the brand Jackus has been diving into as well. It's kind of been a long speculated narrative that that Bitcoin is digital gold and whatnot. And to that, I would say, right, sometimes it is digital gold, and sometimes it acts like a risk asset. It kind of picks and chooses when it wants to correlate with one or the other. So on the left here we have the Bitcoin correlation coefficient to gold, and on the right we have the same thing but for IWM, which is the Russell 2000, which is
Can you just
essentially
explain
risk.
what that is? Like it says it goes from 1 to -1. Can you just explain what that means?
So the closer this blue line is to the top, or 1, the more closely correlated it is to Bitcoin. And as it approaches the bottom down here, that is when they're the most uncorrelated. So yeah, so at different points in time, obviously it looks like it's just an oscillator, right? And I haven't done this yet, but I bet if you just look at just the bottom panes here, they're going to be complete opposites, right? You've got the lack of correlation to gold down here. You've got a very high correlation to risk up here. So at different points in times, this correlation kind of turns on and off, depending on a few things, partially influenced by rates as well. But there's definitely a rotation to be hit. So we're gonna look at that today. But let's just start with gold first. So the digital gold narrative, right, was that Bitcoin is an inflation hedge and should act. This is kind of the commodity argument, right? And that Bitcoin should be regulated by the CFTC and it's a digital commodity and whatnot. I mean, I would say I see the argument, and it does act like a commodity at points, but it really does pick and choose whether it wants to be a commodity or risk at any given time. So if you kind of look down here, it's not tops or bottoms or anything like that. Really, it's just inflection points, right? Is when this correlation bottoms. Okay. So obviously when Bitcoin started off, it was primarily a very, very, very far right of the risk curve asset, right? So it mostly traded like risk, and this is the correlation to gold, obviously. So you're going to see it mostly down towards the bottom. There are times when it traded like gold, but I believe that had more to do with the price of gold than it did with Bitcoin, at least back pre 2015, right? But if we kind of look past that, right, you can see kind of key inflection points, right? Especially when you start getting pretty high up and pretty correlated with gold, you're getting somewhat close to a top, right? Not an exact top, but you're getting a little extended. On the other side of the token, right, when you are pretty decorrelated, at least in the past, it's been a good time to buy, right? It's been a good time to buy when this correlation gets low. Obviously right here, pretty much a bottom. Now, this one is interesting, right? This was a top. So from what I can gather, this was 2021. This was a little different. This was kind of, the run up post COVID. People were looking for an inflation hedge at the same time, and they were going to gold. But this formed a top while being uncorrelated, right? It just seems to prove that whenever this correlation gets low, it's an inflection point, right? It shouldn't continue in whichever direction the trend is going much longer, especially past like 2017. So, I mean, obviously there's not a ton of signal when this thing gets overextended to the upside or very correlated, right? I mean, you could say this is a top, but it wouldn't have given you a whole lot of signal. It really, from what I've gathered, it looks better for buying when it's lower than selling when it's high, right?
So quick question for you. So it's just upon first glance, and this is my first time seeing this. I haven't played around with it on my screen. What you said about when the correlation is negative or basically is close to -1, it basically just means whichever direction you're going, it's probably not about to continue for that much longer. And I will say it implies a negative correlation, right? So -1 negative correlation means that Bitcoin and gold are not trading in tandem with one another. So perhaps when we reach these extremes, whether very oversold like the January 19 bottom or the April 2021 top, and we're at these inflection points, Bitcoin doesn't like to not trade like gold. When it's got a strong negative correlation, it's probably time to rotate out and wait for them to sync back up with each other. So I would almost say that because it's so reactive at that red box that you have drawn towards the -1 correlation, I would say it's very strong reinforcement that Bitcoin, in fact, does prefer to trade like a commodity rather than risk. Even though sometimes it does trade like risk, it trades much healthier when it trades like it.
Yeah, you get to extremes when you're very uncorrelated and you kind of mean revert. So that does strengthen the case, right? That Bitcoin naturally gravitates towards at least the mean, right? At least the mean. It naturally gravitates towards wanting to be a commodity. Indeed, what that implies. But yeah, it's exactly that, right?
Kind of called the FTX bottom too, by the way. I mean, it's pretty close.
I mean, if you would have bought this when it started coming out of correlation, right? When it started moving back up, I mean, you would have bought right before we really,
If you just say to yourself there, like, oh, price just capitulated, we've been moving straight down. Oh, look, it's got a very negative correlation with gold. I should probably fade that negative correlation. Look what happens. I mean, that's pretty cool. Even if there's not a ton of signal to the top side.
Also, you get a little divergence here, right?
I know you love your divergence.
You get correlation moving down, and you get price moving up a little, and you probably get one. I don't have this in the candles, but you get one like tick up here. That's your time, right? That's your time to look for mean reversion, and that's exactly what we got, right? Like this was an extremity, right? The mean was probably, I mean, if you take the mean of this entire thing, it's probably about 30K, right? So this was an extreme and these were extremes, and Bitcoin wants to gravitate towards the mean for sure. So that does reinforce that it wants to trade like a commodity, but there are other times where it wants to be risk. And I know that's how a lot of people in traditional finance view it, right? Is as not even like just the riskiest of the risk asset, right? Riskier than even an IWM, which we should look at. But yeah, that's kind of reinforced the thesis of, the digital gold thesis. But I guess the takeaway would be fade the extremities, right? Fade the negative correlation extremities on like a multi-month time frame, right?
That's pretty useful. So you've got now this is a different correlation. It's still Bitcoin on top, but what's on the
we got Bitcoin on top and log. We got the correlation to IWM or just risk in traditional markets.
So these are just your small cap companies, your growth companies.
Yeah, exactly. Okay. Small cap growth. I mean, you can derive some signal from the tops, right? you definitely should have bought that. When you get correlated to, like, it gets correlated, obviously if IWM is nuking while Bitcoin is as well, that's when you get correlated. I would say Bitcoin probably led IWM here. I haven't even looked into that specific example, but I would wager Bitcoin led IWM into this bottom here. But it's kind of the other side of the coin, right? Like, it really does trade like risk at the same time. The issue a little bit is that this entire thing was QE and ZERP. And, obviously every run up, right? Every bull market for Bitcoin, you're going to get, pretty tight correlation with, stock market risk assets.
And look at 2020 when we started our like mega QE and ZERP from all the printing from March of 2020. Look at that.
Yeah.
It just buoyed out up there.
Yeah, because normally you get the oscillation, right? You get the oscillation between risk and gold, but this was an extreme period of correlation that hung on for a very long time. That's, obviously that is not necessarily a fade. Like, you would not have wanted to fade the 2021 rally by any means, 2020 rally, but we've seen a break in it, right? We've seen kind of a breakdown in the correlation with risk, even during 2022, while risk was moving down. So I look at this and I want to look for extremities, right? So I look at this bottom. I'll say this: like, we started coming out of negative correlation with risk essentially at the top, right? Like, this candle really is what kind of popped us out of it. It ended up being a fade, it ended up being, you would have wanted to fade this top, but in general, wouldn't say that's the case. I wouldn't say that's the case in general, but it's just kind of a mean reversion tactic, right? When these are very uncorrelated, you kind of want to fade into the opposite asset. So like, if we just pull up IWM, right? Not the correlation, just the asset. Let's see if we can put it on top. Yeah. Maybe put it in a line. Get rid of that. All right. So yeah, we've got IWM on top. We've got Bitcoin in the middle. We've got their correlation coefficient on the bottom. I would say IWM potentially led here. The correlation really bottomed right here, and then Bitcoin broke that, right? Bitcoin, I would say, most likely led it. Even though that was grayscale news, it does look like Bitcoin had the pump and then IWM followed. So not necessarily something you would have wanted to rotate. I mean, you could have, right? You could have taken profit out of Bitcoin right here, put it into IWM, wrote it up here. So basically the correlation for now has topped and now it's begun to fall off. But see, I guess from this current moment, I would expect this correlation to tighten up again. I would expect what it's doing right now in terms of moving down, right?
Well,
so I don't know.
Something I'm noticing, like if the 2020 bull market, when there was such a strong positive correlation for like, it looks like 18 months or so, it looks like you could have basically just at that point, when the correlation between IWM and Bitcoin went close to 1 and just hung out up there, you could have just bought Bitcoin and done extremely well. So I think maybe just a key is like identifying when they're syncing up and when they're falling out of sync with each other, and when Bitcoin's going to trade like risk versus trading like gold. So
yeah, exactly. You want to be in Bitcoin when this correlation is becoming positive, right? Is becoming positive.
Outperform the Russell. Yeah, I mean, it should trade
exactly.
Yeah.
When you see this, like, moving up or just trying to hang out above this zero line, you'd rather be in Bitcoin than IWM. And when you see it get real negative, not that you'd want to be in IWM, but that you probably want to be out of risk to some degree, right? To some degree. But yeah, I mean, not a ton of signal in it, but definitely just interesting intermarket correlations. I think the gold one is honestly more interesting for me, but yeah,
I think it seems a little bit easier to read the gold one. I think this one makes sense, but I think the real argument for me is, I mean, after we already determined that Bitcoin prefers to trade like gold, and when it's out of sync with gold, this kind of tells you when it's going to trade like risk, because it's like we know as it's getting close to a negative correlation, if it's not trading like gold, then it's obviously trading like risk. So you kind of just need this one, you know?
Yeah, you really don't need both. Like you just need one because you know it's going to trade like the other, exactly like you said. So
Yes, you buy Bitcoin when it's at, close to a, 0.5 or 1 on this one, which is to gold. And then you rotate out of it when it's a negative correlation, and it will start to trade like gold again.
Yeah, exactly. Exactly. Like this would have rotated out of the top up here.
Yeah.
I mean, but that's pretty much what I've been able to gather. Obviously, obviously it'll be affected by things like inflation and rates and yields and whatnot, but you really don't need to look at, I mean, really don't need to look at all that. You can really just take the correlation. And I would say, like you said, it is more useful to just look at the one with gold than it is with risk. But I mean, it brings up interesting conversations moving forward. Like, what should Bitcoin trade as? What do we want it to trade as? And then what will it trade as? And, I don't know. I think most of us would like it to trade like a commodity, would like it to trade like gold, rather than just like a tech stock, right? But it definitely picks and chooses when it wants to do that. And it seems, actually, maybe that's the wrong approach, because it seems that when it does trade like risk is when it moves up the most. So, yeah, I don't know. This is interesting stuff.
I was talking with you about that. I think that Bitcoin might be a unicorn in the sense that it can, and it probably will trade like both. And hopefully it does. I wouldn't mind that, where probably the best time to hold gold would be during a recession. So when the Fed maybe begins cutting rates sometime late next year, people will probably rotate into gold. My hope is that they'll also see Bitcoin as a viable option, as sort of a newer version of gold, a new fresh commodity, where in the meantime, if we're just dipping and it's a seasonal lull and equities are about to rally significantly out of here, I would hope that Bitcoin doesn't trade like gold. I would hope that Bitcoin trades like risk. So I actually don't mind these periods where it syncs up with gold and then totally decorrelates. But I guess, my big question is, how long will that last where you get the best of both worlds? And I guess, do you get the find out if we get a recession?
That's the question, right? Because ideally we'd want it to trade like risk during the quote unquote pause rally, and then trade like gold during a recession. So in which case it would just go up and up. But I don't know if that's going to happen, because I mean, what we have in front of us is probably an unusual cycle, just based on kind of where they are in their monetary policy, decision making, right? Like we should get a pause next month, right? Which should cause a rally, but then which is quickly followed by cuts, which are bearish because something has gone wrong. So, I've been of the opinion we either get a pretty fast cycle where we're done before they cut, or we kind of get this extended cycle where we have to wait until they're done cutting and it's a full-on economic recovery before we get that full Bitcoin cycle. It's got to be one or the other. And with where the halving is, I would worry that the timing is going to be thrown off. And, people have speculated the halving doesn't even really matter that much. Like it matters less and less, because less and less of the supply is being cut each year, right? Like half as much. It's going to matter, half as much as it did the last halving, right? So I don't know. It's going to be very interesting over the next year to see which way Bitcoin decides to go. But I think in the times we're in now, I'd rather it trade like gold than risk, if I'm being honest. But we'll see. We'll see what happens.
Interesting times ahead. Well, guys, thanks so much for tuning in. Again, my name is Max. I'm the CEO because Bitcoin. We were joined by Tucker, our CFO here. He showed us some very interesting correlations between Bitcoin, commodities, and TradFi risk. So if you enjoyed the content, please consider smashing that thumbs up button. And as well, if you're ready to take that next step, consider subscribing to our channel. We greatly appreciate seeing your guys' continued support day in and day out. Furthermore, if you really enjoyed the content and you want a more intimate look on how Tucker and myself trade, as well as the rest of the Because Bitcoin team and community, we've got a really awesome Discord. Link is down in the description below. Please consider checking that out. It's definitely really cool as well. If you sign up through Twitter and you use the code TwitterBB, you actually get 1 month for free. So guys, thanks so much for tuning in. Like and subscribe, and we'll see you next time.